Guys, how you doing? Hope everybody's doing well. So this morning I want to talk about another question I got online from one of my viewers. Now they're very concerned about the stock market crashing, and I know I had addressed this in another video, a previous video, saying, hey guys, you know what, everything crashes. But you know, when you're looking at your hard-earned money, you know, it's not very pleasant to think that your money can just disappear just like that by purchasing stocks or bonds or mutual funds or whatever it is, REITs. You know, it's not a good thought to say, hey, you know, I've invested my money, my hard-earned money, and it's just gonna disappear like that. So what I want to say about it is that, you know, everything is a risk. Everything is a risk. Now, savings account is sold to us as being more safe, but in the truth and reality about it, it's not. Because if everything crashes, if the stock market crashes, and remember guys, a lot of banks and a lot of investment houses, hedge funds, institutions that, you know, move around big assets such as pension funds and stuff like that, they are invested in the capital market, in the stock market. You know, they might be in mutual funds where there's a pool, but if it crashes, it crashes, and everything's gonna go down. So that would mean, you know, probably a run on the banks, you know, then that would mean bailouts, but let's not get into that. So I mean, you know, I don't want to scare anybody. I know this is such a big fear-mongering topic online. You know, it gets a lot of views, and they're always saying it's gonna crash. But guys, I was in the crash of oil, and oil hasn't rebounded, you know, back to where I was invested, or some of what I was invested. You know, so that's harsh. You know, money was lost, but it's going up. Oil is going up. It's back down, going up, back down, going up. Which is what happens when things go down, they come up. When things go up, they come down. Now, a good thing, in my opinion, to do in order to minimize, you know, feeling the harshness of a supposed crash, whenever this could be, is to just diversify. And diversify is sometimes such a scary word, but it's just to put a little here, put a little there, put a little here, or, you know, use nice mutual funds that have a good history. So, you know, your money is already diversified, you know, holding out for the long term. And another, you know, point I was making, you know, once I was saying, personally, I don't think the people who are getting all the wealth and all the bankers, you know, I don't think they're gonna let this market die. And if you're gonna see the market going down, there should be, you know, signs. There should be major signs. You know, some would say hold, some would say go and pull your money out. But, you know, I don't think these rich elite people who have all of their money in these investments, I don't think they'd allow it to die. And as a matter of fact, you know, some of them are billionaires, so they have the power to somewhat manipulate the market. So a stock is going down, they call a broker, hey, purchase 10,000 shares, and you'll see a gap up because of that purchase. You know, they've raised the value of that investment. So guys, a lot to think about. The thing about it is, if you're not in it, you can't win it. So yeah, again, do your due diligence. You know, I don't think you should be worried about a crash, but let's all see what happens in this hurdle-filled world. Have a good one, guys. Take care.